Hi everyone, I'm Renee Rada. I'm the Vice President of Spidell Publishing, and I'm here today to talk to you about the Wayfair decision. We've been getting so many questions about what this massive Supreme Court case means for you and for your clients, especially your clients who are selling products over the internet. So we put together some important information to summarize the decision, what it's going to mean going forward, what some unanswered questions are that are still out there. And then we also created a chart summarizing the laws in all 50 states, which we will continue to update as states change their laws. So we're going to give you a link to that, as well as a client letter that we think will be very useful for you. So let's just go through what the decision says, what we think it means going forward, and what we think you should keep an eye out for. First of all, this is a big change because basically what the decision says is that physical presence is no longer required for a state to impose tax on internet retailers. So that's a massive change over what we previously had in the Quill decision, which said that companies did have to have a physical presence in a state before that state could tax them. So this opens the door for states to enact new laws. So really what it means is that the change is going to allow states to create laws that are going to pull more taxpayers into their taxing regimes. And what really comes into play here is economic nexus. So the decision says that a tax has to have an activity, or they can only tax an activity where there is substantial nexus with the taxing state. That tax does have to be fairly apportioned. It can't discriminate against interstate commerce, and it has to be fairly related to services that the state provides. But if the tax meets those requirements, then it would be a valid tax, even though the entity doesn't have a physical presence in the state. So the case is based on a South Dakota law, and that law said that South Dakota can impose use tax on businesses that deliver more than $100,000 of goods to addresses within the state, or if an entity has 200 or more transactions for delivery of goods or services in the state, then they could be subject to use tax. And what's interesting to me about the threshold is that that $100,000 number isn't just taxable sales. So you could have sales that would be exempt from tax, but they would count towards that $100,000 threshold. So that just gives you an idea of what one type of these laws could look like and what the actual Wayfair decision is based on. I think that the case is really going to make things more difficult for smaller retailers because the big guys like Amazon, they've already been collecting in all 50 states. So this doesn't change for them. It changes for your clients who are smaller businesses who are selling into other states, especially with all the internet sales increasing. And now they're going to have to look to the laws in each of those states where they have customers to see if they could be subject to sales or use tax. And that's really going to put a burden on those smaller businesses. And you know, there have been some questions out there about, you know, can a state really impose a tax just based on the number of transactions? And I think that becomes an issue when we start to look at things like apps. You know, you might have a company that sells a 99-cent app. So if we look at that South Dakota threshold where they say 200 transactions, so I might only have $200 worth of sales in a state, but I meet that 200 transaction threshold, and am I going to be pulled in and have to collect and remit sales or use tax for that state? So I think obviously this is one of those things where we will see some litigation going forward as states enact new laws, but just to give you an idea of the type of transactions that could trigger a liability. Now, this doesn't mean that physical presence is going away. So some states will continue to have a physical presence requirement. Some states might have a scenario where they have an economic nexus threshold. If a taxpayer doesn't meet that economic nexus threshold, but they do have some physical presence in the state, they could still be subject to tax. So it's not switching entirely to a new standard. And remember, we're still going to have nexus like click-through nexus, affiliate nexus, agency nexus, cookie nexus. So basically, your clients have to look at Who are they using as agents in other states? What websites are they putting ads on? Do they have cookies that are being placed onto computers in states across the country? All of those things can potentially trigger tax liabilities, and this is going to be continuing to be an issue going forward. Also remember that Wayfair isn't over. So the Supreme Court said that the lack of a physical presence requirement didn't mean that the law was unconstitutional, but they did send the case back to the South Dakota Supreme Court to validate the law and make sure that it doesn't violate the Interstate Commerce Clause. So we still are waiting to see the final decision on the Wayfair case, but what we do know is that the Supreme Court has said physical presence does not have to exist for a state to tax an entity, and that's where we have the big change. And what the court pointed to in the South Dakota case is that basically the South Dakota law allowed a small merchant exception. It was applied going forward, so it was a prospective law, and South Dakota is a member of that Streamlined Sales and Use Tax Agreement, which eases the burden on small startup businesses. So the court said, look, we're not going to require the physical presence requirement, but we are going to look at laws and see if they place an undue burden on small businesses. And so they pointed out the factors in the South Dakota case that said to them it didn't put an undue burden on those small businesses. And I think that's going to be something important going forward. They did point to that Streamlined Sales and Use Tax Agreement. There are currently 20 member states, so we may see more states joining that agreement. The other thing the court pointed to is the fact that there's software out there that help companies comply with sales and use tax laws. So I think that's going to be something where we're going to see an emerging market, where we're going to see companies really pushing software that can help your clients make sure they're complying with the laws in all 50 states. I know there's already some out there, but I expect that we will see more going forward. And then the question is, does this mean we're going to see simplification? And I think that's very unlikely. You know, one thing we talk about a lot here at Spidell is that every time they tell us a tax law is going to be simplified, it tends to get more complicated. And sales and use taxes are a perfect example of how complicated laws can be. You know, there are over 10,000 different jurisdictions when we look at local district taxes, different counties, things of that nature. And then the laws just get, I think ridiculous is the only word I can use to explain it. Take New Jersey, for example. So if I buy yarn in New Jersey for art, I have to pay tax. But if I buy yarn for a sweater, no tax on that transaction. In Texas, plain deodorant is subject to tax, but if it has antiperspirant in it, no tax on that transaction. And in Illinois, Twix and Snickers are sold right next to each other, but Twix is considered food while Snickers are considered candy. So, you know, it's going to get very tricky for businesses to figure out what districts they're subject to tax in, which specific rules they have to follow. And I think going forward, we may see some issues because of those complications. Like I said, there are still a lot of open questions out there. Is the decision retroactive? I think the fact that the court pointed to the prospective nature of the law in the Wayfair case leads me to believe that they're really going to hope that states are imposing the law on a prospective basis. So I don't know about it being retroactive, but we get a lot of questions about that, and certainly I think we'll see some guidance or some issues in that area. Again, what about district taxes? So in California, for example, we have a number of different districts. So if a seller is selling into California, do they have to collect the state sales tax? Do they have to pay attention to each of those district taxes? And we're going to have to see what each state does in that area. And then how are the different thresholds going to work? For example, South Dakota has a $100,000 threshold, but that includes sales that aren't subject to tax necessarily. So although they're exempt, they still count towards the threshold. And each state is going to enact their own laws. California has historically required a physical presence, but California is one of the states that filed a brief in support of South Dakota in the Wayfair case, and we have already heard rumblings about potential changes here. So I would expect to see some new laws or regulations coming from California to impose sales and use tax on those sellers from out of state. One thing to point out though, California does offer a voluntary disclosure program. And I think a number of states have voluntary disclosure programs. So one thing that's going to be helpful for taxpayers and practitioners is if they find that they should have been paying tax in a state, they may be able to come in through these voluntary disclosure programs and avoid additional penalties and interest. So that will be helpful for taxpayers there. As I said, the decision is a South Dakota decision, but it opens the doors for other states to change their laws. And this is something we're already seeing happening. So every day we hear about new states that have enacted laws or that are looking to enact new laws. So we did create a chart for you. We've got the link here on the PowerPoint slide. It's also in the materials that we're offering. Anytime you have a question about a state, go to the chart, look at the laws for that specific state, and as I said, we'll be updating that as there are changes. We'll always have a date at the top of the page so you'll know when it was last updated. We have a checklist for online sellers to help them determine whether they might be subject to taxes in other states. And then we've also created a client letter so that you can spread the news to your clients and help them get in contact with you and share with you the information that you need to make sure that they're not subject to any penalties unnecessarily in this area. We hope that this information is helpful for you, and we'll certainly bringing you more information as things change.